Question 1. Under Hawaii's insurance laws, which of the following practices is considered unfair and is prohibited under the state's regulations? A. Offering reduced rates for bundling multiple policies. B. Requiring policyholders to accept optional coverage for discounted premium. C. Failing to offer policies with broad coverage limits based on the individual's need. D. Advertising life insurance rates based on health history without disclosing limitations. Answer: D. Advertising life insurance rates based on health history without disclosing limitations. Explanation: Hawaii's unfair claims practices laws prohibit misleading or deceptive advertising, especially when it comes to offering life insurance. In particular, the failure to disclose limitations tied to health history while advertising rates is considered an unfair practice because it misrepresents what policyholders can expect when applying for coverage. According to Hawaii Revised Statutes 8 RS Chapter 431, insurance advertising must be clear and accurate, and any conditions or restrictions must be disclosed upfront to avoid misleading consumers. Practices such as offering reduced rates, A. Requiring optional coverage, B. Or offering policies based on broad coverage needs, C. Are not inherently unfair as long as they follow proper disclosure rules. Question 2. If a policyholder in Hawaii has a health insurance policy and files a claim, the insurance company must adhere to specific timelines for processing the claim. Which of the following is true regarding claims handling timelines under Hawaii law? A. Claims must be processed within 30 days unless additional documentation is requested. B. The insurance company has up to 60 days to process claims without penalties. C. Claims handling must be concluded within 90 days, regardless of any special circumstances. D. Insurers are required to acknowledge claims within 10 business days, and a decision must be made within 30 days. Answer: D. Insurers are required to acknowledge claims within 10 business days, and a decision must be made within 30 days. Explanation: Under Hawaii's insurance regulations, specifically the Insurance Code and Consumer Protection Act, insurers are required to acknowledge claims within 10 business days after receiving the claim. Once acknowledged, the insurer must make decision and notify the policyholder within 30 days. This helps ensure that claims are processed in timely manner and that consumers are not left waiting indefinitely for decisions. This regulation is designed to protect consumers from delays and unfair treatment during the claims process. Other options are incorrect as they either mistake the required time frames or fail to emphasize the importance of acknowledging the claim within the 10-day period. Question 3 scenario: Mr. Thompson, a Hawaii resident, recently applied for a life insurance policy that includes accidental death benefits, and after reviewing his application, the insurer decided to issue the policy but added an exclusion for accidents resulting from risky activities such as skydiving. Mr. Thompson is upset, believing that this exclusion was not clearly explained during the application process. What should Mr. Thompson do to address this issue according to Hawaii's insurance laws? A. File a complaint with the Hawaii Insurance Division as the exclusion was not disclosed during the application process. B. Ignore the exclusion since it was added after the policy was issued and continue with the policy. C. Accept the insurer's decision as exclusions can legally be added after policy issuance. D. Request refund for the policy premium and cancel the policy based on the exclusion. Answer: A. File a complaint with the Hawaii Insurance Division as the exclusion was not disclosed during the application process. Explanation: According to Hawaii's consumer protection and insurance regulations, any material exclusions or modifications made to policy after issuance must be clearly disclosed to the policyholder during the application process. If an exclusion, such as one for skydiving, was not properly explained or discussed when Mr. Thompson applied for the policy, he has grounds to file complaint with the Hawaii Insurance Division. The division can investigate the matter and ensure that the insurer follows fair practices. Ignoring the exclusion, B. Accepting the insurer's decision, C. Or cancelling the policy, D. Are not appropriate courses of action if the exclusion was not properly communicated. Filing complaint ensures that any issues with transparency or fairness are addressed according to Hawaii law. Question 4. Under Hawaii's insurance regulations, which of the following best describes the insurer's responsibility in the event of policy cancellation? A. Insurers are not required to provide any notice to the policyholder when cancelling policy. B. An insurer can cancel policy for non-payment with 10 days notice. C. Policy can be cancelled immediately without notice if there is evidence of fraud. D. Insurers must provide 30-day notice before cancelling any policy, regardless of the reason. Answer: B. An insurer can cancel A policy for non-payment with 10 days notice. Explanation. Under Hawaii law, when an insurer intends to cancel a policy due to non-payment of premiums, they are required to provide at least 10 days notice to the policyholder. This notice period ensures that the policyholder has sufficient time to address the payment issue before the policy is cancelled. If a policy is being cancelled for fraud or material misrepresentation, however, the insurer can cancel the policy immediately without any notice. The other options are incorrect because insurers are required to provide notice in certain situations, but not in all cases, and they cannot cancel policies for non-payment without following proper procedures. Question 5. Which of the following best describes the purpose of the Hawaii Insurance Fraud Prevention Program? A. To provide legal defense for policyholders accused of committing fraud. B. To investigate and enforce laws against insurance fraud in Hawaii. C. To help insurers reduce premiums for customers suspected of committing fraud. D. To provide a database for consumers to report false claims made by insurance companies. Answer. B. To investigate and enforce laws against insurance fraud in Hawaii. Explanation. The Hawaii Insurance Fraud Prevention Program is designed to investigate and enforce laws against insurance fraud. It is a critical program to identify fraudulent activities within the state's insurance market, including fraudulent claims and misrepresentations during underwriting. The program collaborates with law enforcement to investigate suspected fraud and ensures that violators are penalized according to Hawaii's insurance laws. Options A, C, and D are incorrect because the program focuses on investigation and enforcement, not legal defense or premium reduction. Question 6. Scenario. Mr. Clark is an agent in Hawaii. He is approached by a client who is interested in purchasing a health insurance policy but is worried about paying the full premium upfront. Mr. Clark suggests a premium financing option where the client can pay in installments. The client is excited about the idea, but Mr. Clark does not inform him of the additional interest charges involved in the financing arrangement. What should Mr. Clark do to ensure he is complying with Hawaii's insurance regulations? They continue with the financing arrangement as it is, a common practice in Hawaii. B. Inform the client about the interest charges involved in the financing option before proceeding. C. Charge the client the full premium upfront to avoid complications with the financing arrangement. D. Advise the client to take a loan from a third party to cover the premium rather than offering financing through the insurance company. Answer. B. Inform the client about the interest charges involved in the financing option before proceeding. Explanation. Under Hawaii's insurance regulations, agents are required to fully disclose all terms and conditions associated with any premium financing arrangement, including any interest charges that would apply. Failing to inform the client of these charges would be considered a violation of the Consumer Protection Act, as it would be deemed misleading or deceptive. By providing clear information about all fees and charges, Mr. Clark ensures transparency and compliance with state laws. Continuing without disclosure A, or advising the client to take a third-party loan D would not fulfill his legal obligations. Question 7. Which of the following statements accurately reflects the role of the Commissioner of Insurance in Hawaii? A. The Commissioner has the authority to set insurance premiums and rates for all policies in Hawaii. B. The Commissioner regulates the operations of insurance companies, including their solvency and financial health. C. The Commissioner approves all insurance contracts and endorsements before they are issued. D. The Commissioner has no regulatory authority over insurance agents or brokers in Hawaii. Answer. B. The Commissioner regulates the operations of insurance companies, including their solvency and financial health. Explanation. The Commissioner of Insurance in Hawaii has significant regulatory powers, including overseeing the financial health and solvency of insurance companies operating in the state. The Commissioner ensures that insurers maintain adequate reserves and follow financial reporting requirements. While the Commissioner does not set insurance premiums or approve specific contracts or endorsements, C. They are responsible for ensuring that insurers operate within the bounds of the law and are financially stable. Additionally, the Commissioner does have authority over insurance agents and brokers, D, including their licensing and regulatory compliance. Question 8. Which of the following is a requirement for a surplus lines broker in Hawaii? A. The broker must be licensed to sell all types of insurance policies in Hawaii. B. The broker must obtain approval from the Insurance Commissioner for every surplus lines transaction. C. The broker must ensure that the surplus lines insurer is admitted and authorized to do business in Hawaii. D. The broker must file annual reports on the performance of the surplus lines market with the Insurance Commissioner. Answer. B. The broker must obtain approval from the insurance commissioner for every surplus lines transaction. Explanation: in Hawaii, surplus lines brokers are required to obtain approval from the insurance commissioner for each surplus lines transaction. Surplus lines insurance refers to coverage that is not available from admitted insurers, and brokers must ensure that these transactions meet state regulatory standards. While the broker is not required to be licensed for all types of insurance, they must only engage in surplus lines transactions that are appropriately approved by the commissioner. Additionally, the broker is not required to ensure the surplus lines insurer is admitted, C, as these insurers are not licensed by the state, but must still comply with certain regulations. Filing annual reports, D, is not a requirement for surplus lines brokers. Question 9. Which of the following is true regarding the cancellation of a policy due to non-payment of premium in Hawaii? A. The insurer is not required to send notice to the policyholder before cancelling the policy for non-payment. B. The insurer must give at least 10 days notice for cancellation due to non-payment of premium. C. The policyholder has the right to reinstate the policy without paying the overdue premiums. D. The insurer must give a 30-day notice for cancellation if the policyholder fails to make payment. Answer: B. The insurer must give at least 10 days notice for cancellation due to non-payment of premium. Explanation: according to Hawaii's regulations, insurers must provide at least 10 days notice before cancelling a policy for non-payment of premium. This gives the policyholder an opportunity to make the necessary payment before the policy is cancelled. Option A is incorrect because the law requires notice to be sent. Option C is incorrect because the right to reinstate a policy is not guaranteed without paying the overdue premiums. Option D is incorrect as the law specifically requires a 10-day notice for non-payment, not 30 days. Question 10. Which of the following is the primary purpose of the Hawaii Insurance Code? A. To determine the cost of insurance premiums for all types of policies. B. To regulate the business operations of insurance companies and protect consumers. C. To establish guidelines for insurers to maximize profit margins. D. To dictate the types of insurance policies available in Hawaii. Answer: B. To regulate the business operations of insurance companies and protect consumers. Explanation: the Hawaii Insurance Code primarily regulates the business operations of insurers and brokers, ensuring that they operate ethically, transparently, and financially soundly. It aims to protect consumers by ensuring that insurance companies meet financial requirements and follow ethical practices. The other options are incorrect because the code doesn't directly set premium costs or limit available types of insurance policies, but rather provides guidelines for a fair, competitive market. Question 11. What is required for an insurance agent to obtain a license in Hawaii? A. An agent must have at least 5 years of experience in the insurance industry. B. The agent must pass a state-administered exam and complete continuing education requirements. C. Agents must apply directly through a national insurance regulatory body. D. An agent must have a degree in business administration to qualify for a license. Answer: B. The agent must pass a state-administered exam and complete continuing education requirements. Explanation: to become licensed in Hawaii, insurance agents are required to pass a state-administered exam and complete continuing education requirements to stay current with state regulations. While experience may be beneficial, it is not a formal requirement. The national body does not grant licenses. C. And a business administration degree is not a requirement. D. Question 12. Scenario: Sarah is a resident of Hawaii and purchases a homeowner's insurance policy. A year later, a storm damages her home. She files a claim, but the insurer denies coverage, stating that the damage was due to a pre-existing condition. Sarah believes the damage was from the storm. What should Sarah do next? According to Hawaii insurance laws, A. Accept the insurer's decision and pay for the repairs herself. B. File a formal complaint with the Hawaii Department of Commerce and Consumer Affairs. C. Immediately cancel her policy and purchase coverage from another insurer. D. Sue the insurer in court without attempting to resolve the issue first. Answer: B. File a formal complaint with the Hawaii Department of Commerce and Consumer Affairs. Explanation: in Hawaii, if an insurance claim is denied, the policyholder has the right to file a formal complaint with the Department of Commerce and Consumer Affairs (DCA). DCA can investigate and mediate disputes between consumers and insurers. Options A, C, and D are not appropriate, as the complaint process allows Sarah to seek resolution before resorting to court or paying out of pocket for repairs. Question 13. What is a key requirement for insurers offering health insurance in Hawaii? A. Insurers must provide coverage for all health conditions, including pre-existing conditions. B. Insurers are not required to offer coverage for mental health treatment. C. Insurers can deny coverage based on a person's health history. D. Health insurance policies can exclude all types of preventive care. Answer A. Insurers must provide coverage for all health conditions, including pre-existing conditions. Explanation: Hawaii has regulations in place that require insurers offering health insurance to cover pre-existing conditions, which is part of the state's efforts to ensure access to affordable healthcare for all residents. Mental health treatment must be included in coverage as well. Insurers cannot deny coverage based on a person's health history. C. And preventive care must be covered. D. Question 14. Which of the following is an example of an unfair trade practice in Hawaii insurance regulations? A. Offering a discount for bundling policies. B. Charging a higher premium for high-risk individuals. C. Misrepresenting the terms, benefits, or conditions of a policy to the consumer. D. Providing information on various insurance options available in the market. Answer C. Misrepresenting the terms, benefits, or conditions of a policy to the consumer. Explanation: misrepresentation of the terms, benefits, or conditions of an insurance policy is considered an unfair trade practice under Hawaii insurance laws. Insurers and agents are required to provide clear, accurate, and honest information about the products they offer. The other options are not unfair trade practices but common business practices. Question 15. In Hawaii, who has the authority to approve or reject an insurance policy form before it is used? A. The Insurance Commissioner. B. The Hawaii Department of Business, Economic Development, and Tourism. C. The Federal Insurance Regulatory Board. D. The policyholder based on individual preferences. Answer A. The Insurance Commissioner. Explanation: in Hawaii, the Insurance Commissioner has the authority to approve or reject insurance policy forms before they are issued by insurance companies. This ensures that the policies meet state standards and protect consumer interests. The other options are incorrect because the approval process is handled by state-level regulators, not federal or individual consumers. Question 16. Which of the following actions must an insurer take when they decide to cancel a policyholder's policy due to non-payment of premium in Hawaii? A. Provide 60 days notice before cancellation. B. Notify the policyholder within 10 days if the cancellation is due to non-payment. C. Refund the entire premium to the policyholder within 30 days. D. Provide 30 days notice before cancellation for non-payment of premium. Answer B. Notify the policyholder within 10 days if the cancellation is due to non-payment. Explanation: Hawaii law requires insurers to provide at least 10 days notice to the policyholder if they are cancelling the policy due to non-payment of premiums. This allows the policyholder time to remedy the situation before cancellation. The other options are incorrect because they involve longer notice periods or irrelevant actions. Question 17 scenario: Mr. Lee purchased a car insurance policy in Hawaii and a few months later his vehicle was involved in an accident. The insurer denies coverage, claiming that Mr. Lee did not disclose a prior accident on his application form. Mr. Lee believes the insurer is unfairly denying the claim. What is the best course of action for Mr. Lee under Hawaii law? A. Mr. Lee should pay out of pocket for the damages since he forgot to mention the prior accident. B. Mr. Lee should submit a formal complaint to the Insurance Commissioner to review the claim denial. C. Mr. Lee should cancel his insurance policy and purchase a new one. D. Mr. Lee should sue the insurer immediately for breach of contract. Answer B. Mr. Lee should submit a formal complaint to the Insurance Commissioner to review the claim denial. Explanation: in Hawaii, if a policyholder believes that an insurer is unfairly denying a claim, the best course of action is to file a formal complaint with the Insurance Commissioner. The Commissioner would investigate the issue and work to resolve the dispute. Paying out of pocket: A. Or cancelling the policy. C. At not appropriate steps. Suing the insurer. D. Should be a last resort after other options have been exhausted. Question 18. Which of the following is required by Hawaii law for an insurer to cancel a policy for reasons other than non-payment of premiums? A. A 30-day notice before cancellation. B. A 60-day notice before cancellation. C. A 45-day notice before cancellation. D. A 15-day notice before cancellation. Answer A. A 30-day notice before cancellation. Explanation: for reasons other than non-payment, such as changes in underwriting policies or claims history. Hawaii law requires insurers to provide at least 30 days notice before cancelling a policy. This allows the policyholder sufficient time to seek alternative coverage or address the issues that led to the cancellation. Question 19. Which of the following entities is responsible for enforcing Hawaii's insurance laws and regulations? A. The Hawaii Legislature. B. The Insurance Commissioner. C. The Federal Trade Commission (FTC). D. The Hawaii Supreme Court. Answer: B. The Insurance Commissioner. Explanation: the Insurance Commissioner is responsible for enforcing Hawaii's insurance laws and regulations. The Commissioner ensures that insurers and agents comply with state law, and they can issue penalties or take legal action if violations occur. The legislature creates the laws, but enforcement falls to the Commissioner. The FTC and Hawaii Supreme Court do not directly enforce state insurance regulations. Question 20. What does the free look period refer to in Hawaii's life insurance regulations? A. The time during which a policyholder can cancel their policy without incurring any penalty. B. The time when an insurance agent is free to offer any type of insurance coverage to a consumer. C. The time when an insurer is allowed to rescind a policy for non-payment of premiums. D. The time during which an insurer can raise premium rates for an existing policyholder. Answer A. The time during which a policyholder can cancel their policy without incurring any penalty. Explanation: the free look period is the time after purchasing a life insurance policy during which the policyholder can cancel the policy without penalty, typically within 10 days. This period gives the consumer time to review the terms of the policy and ensure it meets their needs. Question 21. Which of the following is a requirement for an insurance company to sell a life insurance policy in Hawaii? A. The insurance company must be licensed by the Hawaii Department of Commerce and Consumer Affairs (DCA). B. The insurance company must have been in business for at least 10 years. C. The insurance company must only sell policies with premiums over $1,000. D. The insurance company must provide a discount to all residents of Hawaii. Answer A. The insurance company must be licensed by the Hawaii Department of Commerce and Consumer Affairs (DCA). Explanation: in Hawaii, all insurance companies, including those selling life insurance policies, must be licensed by the Hawaii Department of Commerce and Consumer Affairs (DCA). This ensures that the company complies with state laws and regulations. There are no requirements related to the length of time in business or specific premium amounts. Question 22. Under Hawaii insurance regulations, how long does a health insurer have to pay a claim after receiving all necessary documentation? A. 10 days. B. 30 days. C. 45 days. D. 60 days. Answer: B. 30 days. Explanation: Hawaii law requires health insurers to pay claims within 30 days of receiving all necessary documentation. This ensures timely processing of claims and provides a clear time frame for both insurers and policyholders. Question 23 scenario. John purchased an automobile insurance policy from a Hawaii insurer. After an accident, the insurer denied the claim, stating the accident occurred after the policy expired, even though John believed he had renewed his policy. What should John do next? A. Immediately cancel his policy and seek coverage from another insurer. B. File a formal complaint with the Hawaii Department of Commerce and Consumer Affairs (DCA) to resolve the dispute. C. Accept the insurer's decision and pay for the repairs himself. D. Sue the insurer for breach of contract without contacting any authorities. Answer: B. File a formal complaint with the Hawaii Department of Commerce and Consumer Affairs (ECA) to resolve the dispute. Explanation: John should file a complaint with the Hawaii Department of Commerce and Consumer Affairs (DCA) if he believes the insurer has acted unfairly. The DCA can investigate the claim and mediate the dispute. It is not advisable to immediately cancel the policy. A. Pay out of pocket. C. Or sue D. without attempting to resolve the issue through formal channels first. Question 24. Which of the following is true regarding the regulation of insurance agents in Hawaii? A. Insurance agents must have a minimum of 5 years of industry experience to apply for a license. B. Insurance agents must complete continuing education courses every 2 years. C. Insurance agents do not need to pass an exam to obtain a license. D. Insurance agents are not required to carry errors and omissions insurance. Answer: B. Insurance agents must complete continuing education courses every 2 years. Explanation: insurance agents in Hawaii are required to complete continuing education courses every 2 years to maintain their license. While experience may be helpful, it is not a requirement for obtaining a license. Insurance agents must also pass an exam to obtain their license. C. As an omissions insurance is often required for agents to protect themselves against professional mistakes. D. Question 25. Under Hawaii law, which of the following is an example of an unfair claim settlement practice? A. The insurer offers a settlement that is lower than the amount requested. B. The insurer denies a claim without providing a clear explanation. C. The insurer provides a prompt payment after claim approval. D. The insurer reviews the claim in a timely manner and communicates the status regularly. Answer: B. The insurer denies a claim without providing a clear explanation. Explanation: in Hawaii, denying a claim without providing a clear explanation is considered an unfair claim settlement practice. Insurance companies are required to give clear, valid reasons for any claim denial. Offering a lower settlement is allowed if it is fair. Prompt payment. C. is encouraged and timely communication. D. is expected from insurers. Question 26. Which of the following is a common requirement for a health insurance policy to be compliant with Hawaii's insurance laws? A. The policy must cover all types of medical services, including cosmetic surgery. B. The policy must cover emergency care regardless of the provider's network status. C. The policy must exclude coverage for individuals with pre-existing conditions. D. The policy must offer dental care as an essential benefit. Answer: B. The policy must cover emergency care regardless of the provider's network status. Explanation: Hawaii law requires health insurance policies to cover emergency care even if the healthcare provider is not in the insurer's network. Policies are not required to cover cosmetic surgery or dental care as an essential benefit. D. And coverage cannot exclude individuals with pre-existing conditions. C. Question 27. Which of the following is an example of a life settlement in Hawaii? A. A policyholder sells their life insurance policy to a third-party investor. B. An insurer increases the death benefit of a life insurance policy. C. A policyholder names a new beneficiary on their life insurance policy. D. An insurer cancels a life insurance policy due to non-payment of premiums. And so A. A policyholder sells their life insurance policy to a third-party investor. Explanation: a life settlement occurs when a policyholder sells their life insurance policy to a third-party investor for a lump sum. This can provide policyholders with cash while still allowing the insurer to maintain the policy. Increasing the death benefit, B, and changing the beneficiary, C, are not related to life settlements, and non-payment cancellation, D, is a separate issue. Question 20. What does the term underwriting refer to in Hawaii insurance regulations? A. The process of reviewing and accepting or rejecting insurance applications. B. The process of paying out claims for policyholders. C. The process of setting premium rates based on risk factors. D. The process of selling insurance policies to consumers. Answer: A. The process of reviewing and accepting or rejecting insurance applications. Explanation: underwriting refers to the process by which an insurance company evaluates the risk of insuring a person or property and decides whether to accept or reject the insurance application. It also involves determining the premium rates based on the applicant's risk factors. C. But the key focus is on the approval or rejection process. Question 29. Scenario: Sarah has purchased a health insurance policy in Hawaii, but after a few months she receives a notice that the insurer is increasing her premium rate. She believes this increase is unfair and does not align with her policy terms. What should Sarah do under Hawaii law? A. File a complaint with the Hawaii Department of Commerce and Consumer Affairs (DCA). B. Accept the premium increase without objection, as insurance companies have the right to change rates. C. Cancel her policy and purchase coverage from a different insurer. D. Sue the insurer for unfair business practices immediately. Answer: A. File a complaint with the Hawaii Department of Commerce and Consumer Affairs (DCA). Explanation: in Hawaii, consumers who believe their insurer's actions, such as an unfair premium increase, are unjust can file a complaint with the Hawaii Department of Commerce and Consumer Affairs (DCA). DCA will investigate the issue and attempt to resolve it. Sarah should not immediately cancel her policy, C, or sue the insurer, D, before exploring formal complaint channels. Question 30. What must an insurer do before a policyholder's automobile insurance policy can be cancelled for non-payment in Hawaii? A. Notify the policyholder with at least 30 days notice. B. Offer a grace period of 15 days to catch up on payments. C. Provide a 10-day notice for cancellation. D. Provide a notice of intent to cancel 15 days before the policy is actually cancelled. Answer. C. Provide a 10-day notice for cancellation. Explanation. Hawaii law requires insurers to provide at least a 10-day notice to the policyholder before cancelling an automobile insurance policy for non-payment of premiums. This gives the policyholder an opportunity to address the issue before the policy is cancelled. The other options do not align with Hawaii's specific legal requirements.